Friday, October 28th. Mark Milam here with Highland Mortgage. Don't call it a rally just yet, but sure was a pretty good week, and that's not a sentence I've said a lot as we progressed throughout 2022. We really had a lot more bad news than we've had rays of sunshine, but this week, one of those rare weeks where we've seen mortgage rates actually improve, and that may be contrary to some of the headlines that you've been reading, but this is how volatile the market is. It's such a day-by-day, at most week-by-week trajectory, and we've seen some improvement this week, today being the one outlier. I'll flip the screen around and show you what I'm talking about. Here's this week, starting out on October the 24th, Monday. We improved on the 25th, 26th, 27th, giving back a little bit of those gains here on October the 28th, but by all measurements, a very solid week.
Golf clap. Golf clap.
What's behind all this? Well, candidly, it's just sentiment that perhaps the Fed is starting to see a little bit of dissent or discussion among the Fed members about future rate hikes beyond November the 2nd. So we all know come next week, we're going to see the Fed alter the Fed funds rate. We widely expect that to be one more 0.75% rate increase. We think that's in the cards. And then we get to December and we really don't have a firm grasp on what's going to happen in December. Would it be another 0.75 hike? Could it be a half a point? Could it be a quarter of a point? Or do we see an outright pause in December? And we're starting to get those indications that maybe it's time for the Fed to either slow down or pause and take stock of what they've done so far this year. There's been a lot of movement by the Fed in order to rein in 40-year high inflation. Let's see what else is going on. Earlier in the week, we got some information on home price appreciation from the federal, it's actually the home price index from the Federal Housing Finance Agency, and came in well below expectations. We anticipated that home prices would come down a bit, but they came down double expectations. What does that really mean? So let's take a look at the Case-Shiller National Home Price Index month over month. You can see this big dip in home prices occurring back in 2008, 2009. We all know what happened there. This is too big to fail. This is really the collapse of the mortgage industry and home prices dropping, people losing value just month over month over month, somewhere up to about 20% depreciation in certain markets. It's been really stable ever since then. Since we picked up in 2012 all the way through 2021, we had relative stability, and then we see values start to skyrocket here as we get into the pandemic, and we see this explosion in home price appreciation as we move through and out of the pandemic. But here we are today, and we start to see these home prices month over month beginning to decline, beginning to normalize, and candidly, that's good news, because one way that consumers are getting crushed right now is with affordability, and we do need home prices, not necessarily to decline, but we need them to correct, to stabilize. 20% year over year appreciation, just not sustainable. Let's see what else is going on. Take a look at the stock market today. We can see we're up almost 700 points. This is the fourth straight winning week for the Dow, all predicated around the idea that hopefully the worst of this is behind us in terms of what the Fed is doing with the Fed funds rate. So hopefully we'll see that come to bear. A few more charts for you. This is slowing home price appreciation. This is home price appreciation. So this isn't devaluing of homes. This is just the slowing of home price appreciation, which is exactly what we need. And we can see month-to-month price changes, how 2022 is a bit of an outlier from the past 5 years. If we go down, we can see certain markets here across, whether it's Phoenix all the way through Tampa, Atlanta, we can see a deceleration in year-over-year home price appreciation. Folks, don't let any of that scare you. That is not bad news. That is good news. We need to see home prices stabilize a bit. We need to see value acceleration. We need to see it slow. We actually need to see a deceleration in home price increases. That's good news for affordability. On the flip side, we've seen some nice improvement in interest rates this week across various coupons, anywhere from a quarter of a point improvement all the way to a half point improvement. So take a look at those. If I can be of any service to you over the weekend, don't hesitate to reach out, mark.milam@highlandmtg.com. Have a good weekend.